Thank you for tuning in. My name's Todd Kuethe. I'm a professor here in the Department of Agricultural Economics and part of the Purdue Center for Commercial Agriculture. I'm joined by my co-host,
Chad Fiechter, also an ag economist here in the Department of Agricultural Economics.
So we are economists. We're trying to learn and figure out how the ag economy works. So we have a series of conversations in our regular job trying to figure out, we don't understand this problem, the economy works. And so we started recording them. This is our second episode that we've released. So if you're tuning in for the first time, you can go back and check out the one we did with Matt Erickson, which was outstanding. We talked about Senate Ag Committee, how that works. Tell us a little bit about who we're meeting with today, Chad.
Kyle, Maple, and Pete Drost. They were grad students in this department, and they now work in the farmland investing space for a farmland investment company
in Indiana.
U.S. Agriculture.
I've heard you describe our podcast. One of these is sort of peeking under the hood, trying to figure out how the stuff actually works.
Yep.
And I think the farmland investment space, something we hear a lot, people ask us questions about, or you'll definitely hear opinions about it, but we think it's like something we don't totally understand.
Exactly.
We think a lot of people also don't understand, maybe even misunderstand it, right? So
Kyle, why don't you introduce yourself to the audience? Tell us who you are.
Yeah, Kyle Maple. I was born in Kokomo, Indiana, raised on a grain farm. Pete and I work for U.S. Agriculture. It's a privately held investment management firm focused on the farmland asset class. My role currently is Director of Asset Management, so oversee acquisitions and management of the properties in our portfolios.
Perfect. Pete, do you want to introduce yourself?
Yeah. Pete Drost. I grew up on a farm, although not in Indiana. I was actually born in Canada, lived there till I was about 7, and then kind of moved everywhere. Ended up in the Texas Panhandle for a little bit of time, and then went to Oregon. I lived on a hay farm out there, and then picked a college close kind of to Canada, ended up at Purdue. And then, yeah, as Kyle mentioned, worked for U.S. Agriculture. He's my boss. I'm an investment analyst that works under him.
So. Perfect. So for our audience listening at home, it might be helpful for them to envision a face to put to this voice. So which celebrity, to both Kyle and Pete, have people told you look like?
I actually have one. I've had multiple people tell me this. It's mainly happened when I was an undergrad in the tailgating fields here at Purdue. So I know, yeah.
So it has to be true.
Yes, the main actor in Dexter, I've been told I look like.
Your tailgating persona looks like Dexter.
That's what I've been told.
Okay, I like it.
Pete, what have you got?
Business.
That's right.
Yeah.
That's right.
I've been told lately, Will Ferrell probably.
Okay, I can see
Really?
that, yeah.
Or the guy from Napoleon Dynamite, the main character there.
Okay. So if we could get into kind of what is it that you guys do on a day-to-day basis?
Basically, so Kyle manages, he's asset manager, and under him there's a bunch of farm managers. And then those farm managers, they'll come across various deals, and then I'll be the first point of contact. So one of my opening tasks, if we're going to look at a farm to potentially invest in, is I'll get acre numbers, historical yields, a rental figure, and then I'll kind of do some back-of-the-napkin math on it to see if we should entertain making an offer or not. Then assuming we have a good offer price, and then an LOI will get sent out, and then if that gets accepted, then it'll come.
What is an LOI?
Letter of intent.
Okay. Okay.
And I want to go back. So these farm managers are all over the U.S.
Yeah. So Kyle was Midwest all the way down to North Carolina, and then out west, all the way out to Colorado.
Yep.
And then across the Continental Divide, there's another farm manager who manages all the Pacific Coast assets from Idaho all the way down to Imperial Valley, California. And then in the south, there's another farm manager that manages that region as well.
So when you say like they're coming across deals, like this is just they're in the communities and they're seeing signs. What how do you?
A big part of what we do to try to meet the demands of our clients is find stakeholders that have access to or knowledge of local marketplaces and farmland that could come available for sale. That's a wide-ranging group of people, but we're constantly trying to broaden our contact base, whether that be bankers, appraisers, real estate agents, farmers, right, that are looking for capital. And so hitting on all those networks, trying to find access to land that could become available and hopefully purchased by us and managed by us going forward. And then maintaining relationships with operators going forward. When we purchase an asset for a client, those farm managers, including myself, are tasked with managing those properties. A lot of times that is through a passive lease, structuring a lease that works for both sides of the equation, the farmer as well as our client. And so it's an ongoing relationship. We hope it's the start of a 20, 30-year relationship.
I see.
So like when you think about these clients, so these are folks that are looking to get investment exposure to the agricultural sector for some reason, right? It meets their portfolio needs
Correct.
or investment objectives. So thinking about like myself, right? So I've got a retirement portfolio and I've got a financial manager, and sometimes we set a goal, right? If he says like, oh, you should be kind of putting away this much money for every time, right? Or, I've got more money than I thought we had. Like, so we're getting some renovations on our house and it didn't cost as much. So I'll have more to put into my retirement account. And so I'll go to him and say, I've got this much money. Can you help me deploy it, right? So how much is it like people coming to you saying, we've got this much we're looking to invest, and then you go find those investments versus you see some kind of investment opportunity and then you go to your existing clients and say, hey, if you're interested, there's also this opportunity? Or does it work both ways? Or is it one way or the other?
Primarily, it's the first. We have a director of business development named Evan Newton, who's constantly out there knocking on capital doors, trying to raise capital that has interest in this marketplace. And you are correct, Todd. What they are trying to accomplish is typically it's institutional investors like a pension fund that we are courting. And they are interested in this space because it's a great diversification from bonds and equities. And historically, it's been a great inflation hedge. It's a capital preservation, right? It's and pretty consistent returning asset with a consistent cash flow. And those are kind of the main drivers of why they want to be in this space. But we are going and actively seeking them. And a lot of times those institutional investors, when they want to change their investment portfolio, they would have consultants and they might put out requests for proposals of, hey, we think it's time to get into the farmland space. Let's go out and try to source who are the managers we want to invest through.
So another thing that's difficult for the farm audience to think about, and you know this because you're a farmer and from Indiana farm families, like how big, like how many outfits are there like yours? Or like is there a lot of people kind of in this space? Is it relatively niche and small and there's a handful? Like could we fit them in a car, fit them in a bus, fit them on a cruise ship? Like
There's different sizes of buses too.
Well, I didn't even think about it.
Yeah.
See, this is my chance.
Yeah.
I should say those like little buses that like you get at the airport to take you to the parking.
Yep.
Or like a full size city bus.
Yeah.
Or even one of those double buses that hinge, if you know.
Yeah.
Yeah, no, that's really helpful, guys.
Yeah. This is good. We're all learning.
Yeah, that's right. No, I started in this business in 2011, and I would tell you that it was a handful back then, and it has grown. There are more investment managers in the farmland space. Now, there are some that are very specialized, meaning they are focused solely on sustainability, or even some of them are focused solely on debt rather than equity. Today, we're an equity investor, so trying to take fee simple title into the real estate itself. So it has grown. There are quite a bit more. I couldn't put a number on it, but it's been a space that has expanded. Competition's expanded.
But it's not like we're going to run into them all the time.
No,
It's
no.
not like a
Relative to
accountants
equities or something like that.
Yeah.
Like it's we are a tiny investment class, and so the amount of management firms in this space align with that, right?
Yeah. So more bus than cruise ship.
That's a good way to put
So
it.
short bus, that's what we're saying.
Oh man, that's
It might be a
loaded- that's
hinged bus.
loaded-
What you said was it's a hinged bus. It's like it's a double, but not quite a double.
Yeah. No, we
Yeah.
were a van, and we might be a bus now.
Yeah, I think
Okay,
that sounds
yeah.
right. That sounds good.
Good.
Yeah.
All right. Kyle, what's your day-to-day tasks?
Yeah, like Pete said, I actually still to date do a lot of farm management. So I'm out on the farms, speaking with our tenants, negotiating leases with them, and then still sourcing new acquisition opportunities. So again, trying to hit on a variety of networks that would have access to farmland and finding deals that would make sense for our clients. On top of that, as my current role, I'm also helping with acquisition opportunities in other regions from the other managers across the U.S. And so if we've got an opportunity in Idaho, I'm evaluating that, asking questions to make sure we're thinking through all the variables that try to, again, reduce risk for our clients and the investment of that specific asset. So right now it's touching a lot of different real estate across the country and supporting the other departments in our business.
So does that also include travel? Like, are you physically going to these properties to
like
see them?
how often are you
Yeah.
on the road?
Yeah, I'd say at a minimum once a month, and probably
Okay.
more when you count just driving and seeing our farms here in the Midwest. So it's a decent amount of travel. Luckily, probably not as much as other industries, but it's also good, right? The only way you're going to learn apples in Washington is to go out and see what the bottlenecks are, see what the markets and the challenges are of getting those apples from the field to the packing facility. So
Yeah, because the properties you've purchased could potentially be like long-term crops as opposed to the traditional row crops that we think about in the Midwest.
yeah, we would segregate those as permanent crops and annual crops. And in permanent crops, you're absolutely right. You're talking trees, bushes, vines, and hey, there's a lot of value in those assets above the ground, let alone the cost and value of the dirt itself. And so we do look at those differently. In fact, many times, not all the time, we operate them differently. We will, what we call directly farm it. Really, it's hiring an on-site manager to take day-to-day operating decisions.
Oh, I see.
And we would own the crop. We would own the inputs going into that crop. For the row crop land, corn, soybean, even, some of those veg crops, we have some farms up in Michigan, for example, that would grow a variety of vegetables. We're going to passively lease those. We're going to find a high-quality local operator, like I said, hopefully, and developing a long-term relationship where they're going to be on it 20, 30 years and constantly just try to keep up with market rental rates for that land.
So, Pete, what about you as the more junior person? How much time do you spend on the road? More or less than Kyle?
Less.
So maybe we should step back one step, which is, so Chad and I also, as professors, we work with a variety of students, undergrads, grad students. Tell us a little about your training that you did before this. If I had a college sophomore that comes to me and says, man, this farmland investment space is awesome, I want to work in there. What are the activities that we should tell those students to do or skills they should pick up so that they would be attractive to you and other firms like yours?
Really, we are financially, finance is a major part of what we do. Farmland sounds like a pretty easy thing when you just buy and lease it, but we work with what I'd call sophisticated investors, and they want to understand what that asset class does relative to some of their other investments. So we do discount cash flow models to see what we think that asset will return, calculating present values and IRRs, and that goes all the way down from just buying the farm initially to capital expenditure projects that we want to see done on the farm. So a big part of that is you need to have some understanding of finance. I think it's 424 here in the Ag Econ department, if I remember right, is the class. But Pete, what did I miss there in your mind?
No, yeah, I'd say the finance part of it is huge, knowing those time value of money equations. And then if you're going to give a student advice for once they're done their bachelor's degree and they're considering going for a master's or what they should do to be attractive to an investment management company, I'd say one thing I didn't learn about until I guess after I started at US Ag was the CFA. And it's an accreditation program. They have, I think it's like 2 or 3 years long, and it's just strictly on like finance and modeling and time value money. And they get into some theory, but nothing like you'd get into like in a traditional master's program. But yeah.
My understanding is it's a little bit more like pragmatic or like it's more about like, here's how you buy bonds and here's how bonds work and here's how you would sell bonds, as opposed to like theoretically where do interest rates come from or something, right?
Yeah,
so a little bit more on the ground. I too need to look into it a little bit.
No, I think you're right, though. I would always equate it to you have a master's and MBA, for example, in finance is probably something that's going to touch on 100 square foot, but an inch deep. And this is, 100 feet, 100 inches deep, and 1 square foot is what CFA is. I said that terribly, but I think
I think you said that great.
But and there's other tools like that. There's also a chartered alternative investment analyst, and that is very similar. It's focused on it's a little bit of a shorter program, but focused on alternative investment buckets. And Farmland actually is included as an alternative investment. So there are other tools to help you dig into, and like Pete said, a master's program. Pete has his master's in agricultural economics. I did the MS MBA program, the joint program with Indiana University and Purdue University here through the Ag Econ department. So there's other ways to get training. The only thing we didn't touch on that I do think is important, and it's important in anything you're going to do from a career perspective, is communication. I think it's imperative that we are good communicators to both our clients and to our operators on the farm, and that only happens by speaking with people, challenging yourself to get up and do podcasts, whether you're good at them or not.
Okay.
That's us, Chad. He's talking about us. He said not good at it. Yes.
Yeah.
What else should we?
Okay, so one of the questions I have is related to the job. Is like, what surprised you the most in kind of the roles that you have that you didn't expect?
Let's start with Pete. I've been doing this too long for that question.
He's never been surprised.
He's never been. Actually, that doesn't shock me out of you.
One thing that surprised me, I'd say probably, I had really no exposure to permanent crops, but just the timelines that are associated with when people get paid on those, and sort of the cycles that farmers deal with in that region of the.
So I too have no clue about permanent crop. Give me like a concrete example of one.
So, like, for example, like, I didn't know that apples stored so long in, like, controlled atmospheric storage.
How long do they store? I don't literally. I am clueless.
Like, I think it's like 12 to 18 months in storage. So, like,
so when I'm buying an apple today,
it might be like
it might have been
picked last year.
Yeah. Wow.
So, like, and all that stuff, you know, then that affects how soon a farmer gets paid. And then you think about, like, you know, if you're not going to get paid and, you know, until next year, how do you, and you had, you know, consecutive years of, you know, bad prices, how does that impact your ability to get financing? And then not only that, but just like those crops that, you know, that don't have like a futures market, you know, getting good price data. If you're just entering a space, it's kind of hard to do. Like if you're not already
when you're
there.
putting together your initial analysis about whether or not we should invest here.
Yeah.
Part of that is prices, right?
Right. And then also,
could you expect to get from your yield?
Right. And then too, like in permanent crops is just like how variety dependent a lot of stuff is too, like especially in apples and even like in blueberries and it's all prices and stuff that you initially would be hard to come by if you're not in the industry, which really, you know, it really makes the, you know, the analysis part of entering something like that a little bit more difficult than.
Do you have a pro tip of like a kind of apple I should be eating?
A kind of apple that you should be eating?
This is
What's our greatest acreage?
Cosmic Crisp.
I know. So I've actually been doing the Cosmic Crisp.
Yeah,
they're pretty
That's a
good.
good apple.
Yeah.
No, a buddy of mine, we had this discussion as at a bachelor party. This tells you like middle-aged bachelor party. Well,
You're talking apples.
The question was, what is the thing that you spend a lot more than like the regular, like the low, like there's things that we buy cheap and there's things that we splash money on, right?
Yeah.
And it's like, what is the thing that you would be the last thing you would give up spending extra money on?
Great. The elitist professor just said splash money on it. And I was worried about alienating people.
And one of the guys at the bachelor party said, apples. And I was like, I never really, he's like, Cosmic Crisp apples. He's like, if it costs more, I'm still going to buy them no matter what. Like that's my jam. And I was like, I've always been a Honeycrisp guy. And so he got me to convince switch. But
this is
mine was coffee, just to let you know.
Coffee?
We're not splashing money on like, I'd get a better, I'm always going to have the best.
Well, we've had
apples.
this discussion because mine is bread.
Yes, yours is bread.
Bread.
Oh.
I would never guess bread.
No,
Yeah.
the thing about bread, Chad convinced me, is it's a way to have something luxurious in your meal that's cheap. So like, if you buy the most expensive best bread, that's still cheaper per like mouthful than doing the same thing with steak.
Yeah.
But I do like steak more than bread.
No, so I'm
bread more than
I'm
steak.
not disagreeing with you, but I think that the thing is I love sandwiches. So if you up the bread game, you can take a mediocre sandwich to a great sandwich with just bread.
Yes.
Agree or disagree?
Well, I'll have to give it a shot. I'm
Okay.
pretty cheap on my bread, I think.
See, we're already changing the way people behave.
Yeah. This is great. This is really okay. Wait a second. I want to ask the apple question because like we've had Pete, you and I have had discussions about this. But those apples, as we get new varieties of apples, and you get lots of investment in those apples, like Honeycrisps are a lot cheaper today than they used to be, right? When they first came out, because we have so many acres in Honeycrisp. Are we seeing the same thing with like Cosmic Crisp? Like as more Cosmic Crisps, like, or how do they? control sort of the supply of those apples.
Yeah, that's the hard part, is that because it's such a long-lived asset that once you have that oversupply problem, you've already put so much money into getting this tree in the ground and producing, and all those years of non-productive, just dumping expenses into them, and then all of a sudden, if everybody did the same thing, then it's a big deal to all of a sudden just rip that out and put another variety in. So there are some varieties where those rights of who can plant what are more controlled because of what's happened.
Oh, there's like licensing or
Yeah.
something.
Yeah, but with those, I mean, there's obviously extra costs. Like the people who control whether or not you can plant those, you have to pay them,
Big
royalties and
Big
apple.
Well, yeah.
When you think about the work that you do and why people work with you, are you marketing farmland to them as an asset, or are you marketing your services as the asset manager?
Oh, I like that.
Does that question make sense?
I do think I understand the question. I'm even going to break it up even further, right?
Wow.
Yeah. Easy. Easy.
Man, this is why we get
There's a
pros here.
whiteboard behind us. Do you want a marker?
Well, I do have short-term memory issues, so
Okay.
maybe. Really, you're talking about two different, as we look at ourselves as a firm, we're certainly trying to sell our services and the asset class to capital of why it would make sense in a portfolio and why we think we're, the standard in management in this asset class. But at the same time, we're trying to sell our value to the farmers, right? Like, hey, why are we a good resource for you? Why should you consider us being a partner in your operation? So
Wait a second. So you're saying these are the people who are going to operate the assets that you buy.
yeah.
These are your partners. So these are the tenants.
Yeah.
And you're saying you're convincing them that you're a good.
Look, if we have 1,000-acre high-quality farm, it doesn't take a lot of convincing, right?
Sure.
Like, hey, we get people knocking on our doors wanting to farm that. But
Sure.
at the same time, if we have farmers who want to free up working capital or want to 1031 into a piece of ground that sits right behind their shop, want to pay off some debt, just get in a better position. We've done structures where it's a sale leaseback where we can purchase the ground from them and obviously enter a lease where both parties feel comfortable about the terms, feel comfortable about establishing a relationship that we can foresee going into the future. So in that scenario, there is a bit of a sale of, hey, here's why we could be valuable to you in that arrangement, right? And so, yeah, it's probably a little bit less when we have the land already. We control a lot of farmers look and say, hey, one way to grow my operation is to farm more acres, right? And so I need to understand, I need to get to know those guys.
Yeah.
But at the same time, we can be an alternative capital provider to farmers outside of the traditional debt path.
So like if I owned a farm, and I'm operating, and I say like, I want to pay off some debt or maybe dial back or something or change something about my structure, then I would work with you. You would buy that farm from me. I would lease the access back to farm for some amount of time.
Yep.
Agree to.
Yep.
Yeah. Okay.
And all that would be very much negotiable, right? In that situation, the farmer owns the land. We're going to come to him kind of
selling
arms
them.
open.
Yeah, right,
Hey, here's how we approach it. I feel really confident saying we'll be very transparent of what's important to us and how we want to establish the start of this relationship. And again, we're firm believers in trying to make this a long-term relationship between us and the farmer. We think that provides aligned incentives to improve the land and not make short-term decisions to just, get a higher cash flow from that property. So,
Okay. Great answer. So what would make the services that you provide in this space successful? Is it the knowledge of sort of farming and you can communicate that to these investors who are so far? Like, why is an investor needing services? Right. This isn't me putting you on the spot. I'm assuming that there is a value, right? What is that value that you bring?
yeah, look, we mentioned it earlier. Farmland as an asset class relative to other asset classes is tiny. It's not something that people are well versed in outside of if you've lived in this industry, this world, right? And so a big part of that is capital wants to find people who does truly understand that asset class. What are the inherent risks of that asset class?
Sure.
How do you develop a portfolio where we are going to get that consistent cash flow return that preservation of capital and capital growth at the same time, right? That's a huge thesis in owning farmland. And so they would hire a group like us because, we think two things. We think we understand how to diversify a portfolio within an investment mandate.
So
right?
within a unique asset class that's very small, you're
Yeah.
saying you can even diversify a portfolio of farmland.
We certainly try to,
Yeah,
and that's
okay.
done geographically. That's done through crop type. That's even done through operating structure, lease type. Right there, that you can get some diversification benefits from that. And so that's how we go about. And the second thing that we're really proud of, and what we sell ourselves on is again, our background in agriculture runs deep. We are people who get it and understand the challenges on the farm. And so I think that comes through on the capital side. I believe it does. I also think it comes through on the farm side. Like when we're on the farm and are talking to operators, I'm not farming every day, obviously, but because of my background, I think there's a comfort level that we can communicate well to each other, and there's value in that on the farm level itself. So
we have these kind of conversations as professors with people across the ag sector all the time. We've actually had conversations with you guys about these same things already without the microphones. And so when we're trying to understand how the economy works, and we ask a series of questions, so what do you do, right? What are you trying to, what are your objectives? What are you trying to achieve? And we've touched on those. The other thing we think about when we're sort of building a model is like, what are the constraints? Like, what are the things that prevent you from doing the best? Now, obviously, economists would say we're always constrained, all of us, by some sort of budget constraint. We all have a budget constraint. We're also always constrained with time.
Yeah.
Are there any other like relevant constraints that you think that you sort of hit on in your day-to-day job
Constraints for what exactly?
to reach your objectives?
yeah, probably again, we've touched on this a little bit, but farmland is a niche asset class, and your question really hit on that. You're not selling, many times we're not selling ourselves just as managers, we're selling the benefit of farmland as an asset class, and sometimes how to even appropriately view that asset class. I think I mentioned earlier the farmland can be in a bucket called alternative investments. Well, also in that bucket is private equity is considered an alternative investment. Well, if you're comparing returns from farmland to private equity, we're going to lose. But understanding the true risk of farmland as an investment class versus the risk of private equity.
So private equity being like, I could invest in someone's startup that they've got like an app that they're going to do,
Yes,
or some other sort of company or space.
Yep. Any privately held business that wants capital, hey, they would sell a portion of ownership in that business, right? And the private equity can help fund it to help it achieve its growth goals. There's inherent risk in that. Much more than owning a piece of real estate and farmland. And so trying to educate on the differences of that, and that's just one example, but how we compare to bonds and why it's a good thing to have a portion of your portfolio in farmland, how it fits in your portfolio, and how you should think about it. There is an education to that, and again, it's simply because it's well, in my mind, it's simply because it's such a niche asset class that really probably, I would say the early 90s are really when you started seeing investment ramp up in this asset class.
So if I was thinking about this in terms of building a model, what I would think of that is like one of the constraints is your willingness, so potential clients' willingness or understanding of investing into this space. Is that a way to sort of characterize that?
Yeah, hey, it's raising capital.
Yeah,
Right. Yep.
Yep.
Yeah, it's simple.
Well, and it's tricky too in people that raise capital to sort of know what you're getting, right? And like, particularly like, you mentioned that you've been in this space for a long time. So there's now a track record of here's what we do and here's how we operate. But if we went back, had this conversation 10 years ago, it's a lot less much of a track record, more of a vision, right?
That's exactly right. Yeah.
Well, it's kind of like we're nerd alert. trying to move the demand curve as opposed to just move on the demand curve, right? Like you're trying to build,
You're trying to shift that demand
right?
curve.
Using information to say like, hey, this matters. This could be something part of your asset, part of your portfolio.
Yeah, and we do stress that we look at farmland as a part of a portfolio. This is not the driver of your portfolio. Again,
Not for me, man.
Yeah,
I'm doubling down.
After this conversation.
After this conversation, put it all on farmland.
there you go. I guess we're doing all right here.
Yeah.
One at a time. One at a time. You got a chat.
That's a big part of it though. Is just again, it's a niche class. Why does it make sense to your portfolio? And really, again, we look as a part. We look as a good diversification in the portfolio, less a driver of your portfolio. If that makes sense.
So then, thinking of this economy, then are you more constrained? Do you see more potential investments than you're actually able to pursue? If that makes sense. Right. So if you're constrained by like a budget constraint, then what we often end up observing is people that say like, well, I would have done this had I had additional capital. Right. Like, is that still a space out there?
Yeah. We're always happy to accept more capital, but I wouldn't call us capital constrained right now. It's just finding the right investment opportunities.
Okay. So
it's a price thing now.
It's also the limited supply.
Yeah.
Limited supply, and look, we always say this, we believe we don't set any county records with pricing, right?
Sure.
Our pricing of an opportunity is based on mathematics and finance and less emotion, right? And so when you pull that out, I don't believe we compete with farmers very often.
Sure.
If it's a piece of ground that's next to them and they're going to own it, that they will own it, and we won't be able to compete on price. So,
well, I think that's one of the things I wanted to ask, because that's a sensitivity, right, in the farm community. And
Absolutely.
you guys have touched on this, like you're looking for long-term sort of relationships with farmers, but there's a sensitivity to this. Investors coming into communities, right? That this is the big bad sort of like they're coming in and taking away opportunity. And you're saying we're not standing at that public auction sticking the paddle up 10 more times.
Yeah, we absolutely, I mean, just to hit on that example directly, we have bought stuff at auctions, but it's few and far between. And frankly, we try to avoid them.
Sure.
And so those aren't areas where we go. We try to find the niche opportunities that again, from a mathematics standpoint, work for our clients. And so that's our focus. That is a big constraint though, because those opportunities are few and far between. And that's again why we try to go and find these networks that can help us dig those out. And it kind of goes back full circle to the raising of capital. Again, we're always in the business of bringing additional capital to our firm that wants to invest in farmland, but we're also sensitive to the fact that we don't want to be out there buying anything and everything. Right? If you start doing that, I think you lose I fear we lose our sense of self of how we want to go about this, how we want to be a prudent investor in this space. So you don't want to flood the marketplace. Again, this is a relative to other asset classes. This is a small asset class.
Yeah.
And then the other one that we always sort of ask, right, is like, has there been some recent changes that maybe have shifted how you view your role in the economy, or things that maybe you anticipate being on the horizon, right? So, for example, it'd be impossible to have a discussion now, this spring, and not talk about sort of like trade relationships and trade partners.
Has something changed there?
Yes. Well, or at least
something changed during this conversation.
Yeah, probably.
Literally,
get an alert?
So there's going to be a relaxing.
Okay, so but there is a threat of potential trade relationship. We also just went through COVID, right, where our whole international shipping stuff has been adjusting how they think about things and markets, but like or just policies in general. I know that as a financial investment firm, you also have regulatory requirements of things that activities you can and can't do, or ways you can frame your potential. Like you can't take everything that would potentially pop up, right? So, like, has there been any sort of major changes in the last since you've been in this profession that have changed how you think about your business or do your business, or things that you think like, this is what I'm watching because I think this could change next?
Probably there's a couple different paths we could go down here. I'd start with, and I feel like we've been good at this, scrutinizing specifically out west water resources and understanding, hey, California is a big one. In 2014, they enacted the Sustainable Groundwater Management Act. Did I say that correctly? That's
Yep.
amazing.
Sigma.
Yeah.
I think they call it Sigma.
I can't believe I got that
They
out
call it
smoothly.
Sigma?
Yeah,
Yeah.
SGMA.
My kids would love that.
But trying to stay on top of those water regulations is important, right? Specifically for those farmland out there is reliant on consistent and sustainable water resources. And so understanding that and putting an emphasis on understanding that and what the future might entail for specific properties and its specific water rights is absolutely important. And that's been a evolving regulation as we go forward, and I think it will continue to evolve. Probably the other one that we've noticed, again, over my 10 to 12 years in this space, is sustainability is a factor from the capital providers. Like, it's not, I don't want to say it's, there's a balance there, but people want to understand what's going on a farm. Part of the attraction of farmland as an asset class is it's a tangible asset, and it has direct effects on the environment and humanity through the production of food, fuel, and fiber, right? So I think we're lucky in this industry. I think everybody in this room would agree that we've made incredible strides in how we operate farmland and produce that food, fuel, and fiber. I hate saying this because this gets said too much in agriculture, but part of our job is telling that story of how much we've changed and what our tenants specifically are doing that's really doing really well on our farm, on our clients' farms, I should say. But also, probably looking into the future, how do we continue to push that narrative forward? Let's not stop on the improvements we've had now. And we do that alongside our operators. We don't really push anything down. I certainly don't feel it's continual growth by them. Tillage practice is a big one, right? I can remember having multiple moldboard plows as a kid. Those are as much scrap metal as they are anything at this point. So we continue to push that envelope where there's a lot of no-till going down, and even the tillage that does happen, it's vertical tillage or strip tilling, and it just has a lot less disturbance on the soil. People would be surprised how much of that is actually going on farms right now versus what's kind of stated out there.
I think one of the ways our professional lives probably overlap as professors and people that work in this investment space is we spend about as much time talking to people sort of core and inside the ag sector as we do people completely outside of it. Right. And so some of that time, there are people that are still amazed at the technology use of farms.
Yeah.
Right. And they sort of think about Tom Joad or their grandpas or a farm-all tractor being a huge innovation sort of thing. Right. Yeah. And then you get
new pair of overalls.
And you get into the world of no, we're talking about robots and we're talking about drones and right. I think sort of that in some ways there are my perception people that are sort of resistant to sort of tell that no, we're a high-tech investment or high-tech industry doing these sort of things, because there are times it's beneficial to sort of point to no, we're just people with a dream, living on the soil like 100 years ago, but they're sort of both true. Right. And how you can communicate, sometimes it's a matter of taking that group that's sort of from the outside and exposing them to the inside, but also people that are sort of inside of it, exposing to the outside, well, no, here's also what their concern. This is what we ask these economists questions. Here's what they're trying to achieve. Here's what their constraints are. And then you can kind of understand a little bit more how these things fit together, right?
Yeah, that's a really good example. I do think, again, that's where I hope our group brings value to both sides of the equation. Even our tenant farmers, I think the fact we talk about what people who are interested in agriculture, because they're wanting to invest in it, but probably don't touch it and feel it every day, right? They understanding the questions that we are getting asked and communicating those and trying to help develop the right response and I think there's value to them to see, hey, where's this world going from a capitalist perspective? What's interesting to them? Should I shift how I think about my operation in this capacity? You're right. We probably play a little bit of a similar role in those conversations.
I got a question because this comes up, and I've never asked either of you this, but when Dow spun out Kuethe, there was a lot of conversation around there was investors who are wanting more exposure to production ag. And so it was like when they first started, they were going to release the stock. There was this big pop of interest in like, how do we gain as investors to production agriculture? Do you feel like there's also a part of that in your investors that they want to get closer to sort of the farm and sort of the market dynamics that happen there, or is that really not something that you encounter?
I think that's an investor by investor basis. One of our first clients was a state teacher pension fund that the director of that, he loved agriculture. He would drive up in an RV, or no, I'm sorry, it was like on the back of a pickup, but he had a sleeper on the back of
the camper shed.
Yeah, on top, and would come tour the farms.
Seriously.
And I only use that story because, I mean, that shows how much he loved this space, right? He loved this space. And so it's an investor by investor basis.
Okay.
Like some of them look at it admittedly as, hey, what's the returns? What's the risk? What's the variability in these returns? And it's a numbers game.
Sure.
Some of them look at very much as, hey, I love the fact I can touch and feel this. I love the fact that you can tell me how we are improving the environment through this asset class.
What's the weirdest crop that you've ever had to evaluate as a potential expansion?
But I don't know if it's weirdest, but I'd probably say, chestnuts was a unique one.
Chestnuts, huh?
Yeah.
I've not thought about chestnuts as a crop.
Well, can you actually explain to me that you eat chestnuts? Like that's what you're supposed to do with them, right?
Yeah. And I don't know anybody who eats chestnuts. Which
Yeah,
is
but like that was
Nat King Cole at least enjoys the smell of them roasting by an open fire.
Yeah.
But he didn't say anything about eating them. So I don't know if he
That's
ate
true.
them.
I did not-
they taste kind of like a buttered potato almost. Like
without the butter.
You don't have to put butter on them to get the butter flavor. It's
Wow.
baked in there.
I actually, because we explored this a little bit, and so I went and bought a pack, and you can find them in your local grocer.
Oh, you can.
Yes,
Yeah.
And you just, like,
typically
you
around
just-
Christmas.
You
And I
place
assume,
them, you
and I
score
assume
them.
you roast them either by an open fire or
Microwave.
or a toaster oven.
or a closed
Oh,
fire.
okay.
Oh, did you do? Yeah, it wasn't a microwave, right?
It is a toaster oven.
Can you
Oh,
give
yeah.
me like how large are chestnuts?
Yeah, they're bigger than a quarter, probably, but smaller than a $50.
I'd say, yeah.
Do you eat the whole thing?
And is it like one big?
It's like a
Is it
third
like
of a.
is it like a Brazil nut where it's a giant one thing, or is it like a walnut where there's like pieces within?
Oh
You know what I
no,
mean?
it's.
I
like
think you're
the
forcing him
skin.
into the nut category too
I
much.
know this is turning into a nut podcast.
Yeah.
It's really- you brought it up. You introduced the nuts. You asked
okay.
follow-ups, and now I want to know.
Okay.
Because
All right,
when
it's fine.
Pete said they taste like a buttered potato,
Yeah.
if you said like, "What's your favorite food?" Number one's bread. Number two might be buttery potatoes.
Wow.
'Cause they
what-
can use chestnuts for like one of their big uses is gluten-free flour.
Oh,
And what was the other yeah, so it's different from a lot of other nuts that like it's like a carbohydrate. I think it's less of an
okay.
oil than like an almond or something.
how did you find them? I mean, delicious.
I mean, when you say buttered potato, I couldn't agree more. That's what it tastes
Yeah.
like. And
Wow.
so it's unlike any nut you've had.
Yeah.
And if you roast it and it's warm, it's not bad. I didn't mind it.
We like to end with a lightning round.
Okay.
Okay, so the way a lightning round works is you have to give quick answers. You guys are good at giving very long,
Drawn out,
answers.
thoughtful
So
answers.
we need just a quick one. Okay.
Okay.
So the first lightning round question is, if you had access to a time machine, you could only use it for work purposes. This is now the time machine for leisure. And you're going to use it to get better at your job. When are you going?
I'd probably say early 1900s in California.
Oh,
See,
what are you doing? What are you doing? Why are you going to early 1900s California?
I just want to see them, hash out all the water rights and making the world out there
All
that
right.
exists today.
I'm going to be a lot simpler. I'd go 2002 in the Corn Belt and pre-RFS standard.
Yeah.
Okay.
Buy a bunch of farmland.
Yeah.
Yeah.
Yeah. If you had a magic wand, similarly at your office you can use for work, and you can use it to gain a piece of information or knowledge that you don't currently have, what would you use it to learn?
I'd probably, I don't know, I'd use it just to, I keep talking about water, but like if you could physically see in the ground exactly how everything's actually looking, I think that'd be really important.
Underground water vision.
Yeah.
Yeah.
Yeah, that's a good.
I like the water. That's good.
Yeah, and I'll say understand President Trump's long-term goals here.
Ooh,
yeah, that's
wow.
good.
That's
Yeah, just really virtually any politician.
You're right.
Trump is the obvious one because it feels in real time because he is the
He's
president
here, yeah,
recently.
yeah. But
And
that's
it
a good
seems like
point.
all over, right? But if you could just observe true political goals and intentions
Yeah.
of any, like that's a great magic wand. You could sell
Yeah.
that one for a lot of money.
Oh yeah.
Oh yeah.
Get out of farmland. Let's do one more. The last time you had trouble sleeping because you were thinking
a good
about
idea.
something from work, what were you thinking about?
Oh, this is how to start with me.
We're looking at you.
Yeah.
I don't know. I'm not very good at public speaking, so I'd say the last time I had to like give a presentation or something, I just
Okay.
lay awake thinking about it probably.
Okay. I struggle with delivering bad news, and that probably is something I would, if I had to guess the last time I did, it'd be something like that, knowing I had some bad news to deliver.
That's good. That's good.
oh man. Hey everybody, this is Chad. Todd was a little busy, so I'm doing the outro here. I hope you enjoyed that conversation we just had with Pete and Kyle. We did. We learned a lot. One thing that I really liked is when they talked about,
Farmland investing.
if you enjoyed this podcast, please
Like and subscribe. And we'll be back in another month with a new conversation. We look forward to having you join us then.